Okay, so the latest numbers for Tokyo's new condo market are in, and wow, they are making some serious waves. But you know what? Those headline-grabbing prices, they don't even tell half the story. There's something much more interesting going on underneath the surface. Let's dive in and see what's really happening. Hello, and welcome to the Japanese Economic Review channel. Today, we're unpacking the latest official statistics just released by the Real Estate Economic Institute. These numbers are hot off the press, so let's get right into it. All right, get ready for this. Here's the number that has everyone talking. 84.69 million yen. Yeah, you heard that right. That was the average price for a new condominium in the greater Tokyo area last month. It's a staggering figure for sure, but believe it or not, that's just scratching the surface. Now, a price like that isn't just a random spike. It's part of a really strong upward climb we've been seeing. But here's the thing. If you only focus on that price tag, you are absolutely going to miss the real story. So the big question is, what is the data actually telling us about what's happening on the ground? And that brings us to the core of this month's report, which is, honestly, it's a bit of a paradox. It's like a tale of two completely different markets happening at the exact same time. You've got these prices that are just shooting for the moon, and then you have the sales figures, which are telling a completely different story. Okay, so this really lays it all out. On the one hand, prices are up a whopping 15.5% compared to last year. I mean, that's a huge jump. But then look at the other side. The number of units actually sold, that's down by 6%. So how on earth can prices be skyrocketing while fewer people are buying? That's the $1 million, or I guess the 84 million yen question we're going to answer. All right, first things first, let's zoom in on the price side of this puzzle. Because this isn't just some fluke, a one-month anomaly. This has been going on for a while. The key word here is consistency. We're talking about both the average price and the price per square meter going up for 8 months straight, year over year. That's not just a trend, that's some serious, sustained upward momentum. It tells us there's a powerful force pushing these prices up. Okay, but we already know sales are down, right? So to figure out what's going on, we have to look past the flashy price tags and dig into a metric that really measures buyer demand. And that metric is something called the first-month contract rate. Now, this is an absolutely crucial number. Think of it like a market thermometer. It tells us what percentage of new condos get a contract signed within the first month they're listed. If the rate is high, the market's hot, buyers are scrambling. If it's low, well, it means people are thinking twice. So what's the reading on our thermometer for December? It's 63.1%. Now, just to give you some context, industry experts usually say a rate of 70% is the sign of a really healthy, strong market. So 63.1, it's kind of lukewarm, isn't it? It's not terrible, but it's definitely not a sign of a market that's on fire with demand. And when you look at how this number has been bouncing around recently, the picture gets even clearer. Yeah, December was a little better than November, but look at the swings. It's been all over the place, really struggling to stay high. I mean, back in September, it dropped all the way to 54.4%. This tells you that buyer confidence is shaky at best. It's nowhere near what you'd expect with those crazy price increases. Okay, so we're back to our big mystery, record high prices, but cooling demand. How is that possible? Well, the answer is all about location, location, location. As you're about to see, this isn't really a story about the entire Tokyo market. It's a story about one very specific area that's throwing the whole average out of whack. So first, let's just see where all these new condos are coming from. This shows you the breakdown of new supply in December. And look here, the central 23 wards of Tokyo made up about a quarter of all new units, just over 25%. Now burn that number into your brain, because it is the key to this entire puzzle. And here it is. This is the smoking gun. Just look at that row for the Tokyo 23 wards. The average price? A jaw-dropping 147.89 million yen. That's an increase of almost 37% in 1 year. It's just mind-boggling. Nothing else is even in the same ballpark. So that relatively small slice of the market we just talked about, the super high-end properties right in the heart of Tokyo, they're single-handedly dragging the average for the entire region into the stratosphere. Okay, so now we know what's happening. But the next logical question is, where do we go from here? To get a sense of that, we need to look at a couple of forward-looking signs. Specifically, inventory and what developers are planning next. Take a look at this number. That's how many new condos were sitting on the market, unsold at the end of December. And get this,
That number shot up by more than 1,200 units in just a single month. Now, that's a classic signal. When sales are slowing down and the number of unsold homes is piling up, it's a huge red flag that supply is starting to get ahead of demand.
So that leads to a really important question, right? Are the developers seeing this too? How are they reacting? Are they just going to keep flooding the market with new buildings, or are they getting nervous? Well, the forecast for next month seems to give us a pretty clear answer. It looks like they are definitely pumping the brakes. We're only expecting about 1,000 new units to hit the market. That is a very low number. And it tells us that, yes, the developers are seeing exactly what we're seeing. Demand is softening, inventory is piling up, and they're starting to get cautious. Okay, let's wrap this all up. What have we learned? First, that crazy high average price, it's being completely distorted by a small number of ultra-expensive properties in central Tokyo. At the same time, for the rest of the market, buyer demand seems to be cooling off, which we can see in the lower sales and that shaky contract rate. As a result, unsold inventory is starting to climb. And finally, the developers are taking note and are planning to release fewer new units. So the big question hanging over everything is, are we looking at the beginning of the end for the Tokyo condo boom, or is this just the market taking a much-needed breather? Thank you for watching the Japanese Economic Review. We look forward to having you with us again.